Happy Friday! We're closing out the week with the latest market trends here on Tredomatix Daily Financial News. Be sure to subscribe for all the insights you need and visit Tredomatix.com for more detailed financial analysis. And in U.S. stock market news, Wall Street had a mixed day. Stocks gave up early gains after the Federal Reserve's updated forecast signaled fewer interest rate cuts and higher inflation for 2025. The Dow Jones rose slightly, snapping its 10-session losing streak, the longest since 1974, while the Nasdaq and S&P 500 dipped. Analysts attribute this to concerns about inflation trends and a cautious Fed outlook. Weekly jobless claims fell more than expected, and third-quarter GDP was revised up to 3.1%. But the market remains volatile as traders anticipate fewer rate cuts next year. Meanwhile, the CBOE Volatility Index, often called Wall Street's fear gauge, eased to 24.09 after a recent high. Bank stocks saw modest gains, benefiting from rising yields. And in Asian markets, shares hit a 3-month low today, reflecting global uncertainties. Investors are bracing for U.S. inflation data expected later, which could influence future Fed policies. Japan's Nikkei stayed flat, but has surged 16% this year, aided by a weaker yen, which recently hit a 5-month low. Over in China, the People's Bank of China held rates steady, meeting expectations, while Hong Kong's Hang Seng Index edged up slightly. However, the broader MSCI Asia-Pacific Index dropped 0.6%, heading for a weekly decline. And in Forex news, the dollar continues to dominate, hitting a 2-year high. The hawkish Fed outlook has strengthened the greenback against major currencies, with the euro and sterling seeing notable declines this week. The yen remains under pressure, trading at its lowest levels in months as the Bank of Japan maintains its dovish stance. Meanwhile, central banks in Europe and Canada have implemented rate cuts, highlighting a mixed global approach to monetary policy. With inflation data on the horizon, expect further currency fluctuations. In corporate news, Micron shares tumbled 16% after disappointing revenue forecasts, dragging down the semiconductor sector. Meanwhile, homebuilder Lennar reported earnings below expectations, pulling the housing index down 2.6%. Despite recent dips, the S&P 500 is still up 23% for the year, the Nasdaq is up 29%, and the Dow has gained over 12%. However, market sentiment remains cautious as investors weigh the Fed's policies and economic indicators. And wrapping up with commodities, oil prices declined this week, with West Texas Intermediate crude down to $68.99 per barrel. Concerns over slower demand growth in China and a strong U.S. dollar are weighing heavily on the market. Gold also saw a 2% weekly drop, settling at $2,596 per ounce, as higher interest rates reduce its appeal. Platinum and palladium posted losses, while silver marked its worst week in a year. With uncertainty surrounding demand and central bank policies, commodities are under pressure heading into the new year. That's all for this week from Tredomatix Daily Financial News. If you enjoyed today's update, hit the like button, share with your network, and subscribe for daily market coverage. Have a fantastic weekend, and we'll see you again on Monday.